This week we're going to take an updated look at soybean crop conditions and progress across the U.S. We're going to take a look at short-term weather trends as we move into this last 10 days of July. And we're going to wrap things up looking at some concerning signs about cancellations of old crop soybean export sales. Hi, this is Brian Basting with Advanced Trading. Let's talk about the soybean market. We've moved into the last half of July now, and this market remains historically volatile. Let's start out taking a look at crop condition updates for the U.S. We've looked at our map before here, but it bears repeating that the red circles imply deterioration in good to excellent conditions compared to last week. The yellow circles imply no change compared to last week, and the green circles imply improvement. Now notice nationwide, we did see a 1 percentage point drop from 62 to 61 on good to excellent. That is still 1 percentage point above last year's 60%. Quite a bit of deterioration, at least in terms of quantity, in that western corn belt as well as the northern plains. Now we did see some stability across the heart of the corn belt, states like Michigan, Missouri, and we did see some improvement in the southeast as rainfall occurred. Let's now look at our aggregate crop condition index for beans here. Now it's at a season low here for 2022, notice in that blue line. It's right above, slightly above last year at this time, but well below some of those other years like 2018 as well as 2016. Now we're going to take a look at crop progress on beans as beans begin to set pods here. Only at 14% here in the middle of July, still a long way to go on average over the next 2 weeks. About 32% or nearly a third of the beans will set pods, so we should be approaching 50% of the beans setting pods by the end of the month. Of course, as we get into this last half of July and especially August, weather will be critical for beans. Let's take a look at the short-term forecast. Our slides this week, as usual, are courtesy of T-Storm Weather. We're starting out here looking at temperatures. It is going to be quite warm through Sunday of this week. Warmest here in the southern plains, above normal in the heart of the corn belt, eastern corn belt, but not near as warm as the southern plains. Now we're going to look at rainfall totals here, Friday through Sunday. It does look like the possibility of rain exists across that northeast part of the soybean belt. Amounts, of course, vary during the summertime. We all know that. But maybe a ½ inch to 1.5 inches of rain across that green shaded area. Now we're going to stretch into that final week of July here, the 25th through the 31st. Quite a wide area there depicted in the green shade of a ½ inch to 1.5 inches of rain. Obviously, we'd like rain, particularly in the month of August, so we'll see how that shakes out. But it does look like it's going to be a moist time period here, that last week of July. Now, over the next 2 weeks here, we're going to aggregate that, looking at the yellow area is normal over the next 2 weeks. The red area depicted here in the southern plains down in the deep south is below normal. But as we move further north, it's better. And as we move further east, there's actually some light green areas, which means above normal precip. Now, of course, supply is only one part of the price equation. We're going to take a moment here and focus on demand. Let's take a look at unshipped export sales of old crop beans. Now, this is a slide from a month ago, a slide from June 21st, our video that day. This is what we were highlighting at that time. That time, sales of beans, old crop beans, were still quite good, over 2.2 billion bushels. We did highlight one concern, though, possibility of cancellations and the possibility of switching beans away from the U.S. to Brazil origin. Well, as it's played out here over the last month, that's precisely what's occurred. Due to the cancellations, this year's unshipped sales total is falling rapidly relative now to recent years. So as we wrap things up now on the demand side, year-to-date sales have declined. We've seen 3 consecutive weeks where China has canceled old crop soybean export sales from the U.S. That's a very strong signal that they are either switching to Brazil or they actually don't need the beans. So it now appears that the USDA old crop export forecast is at least 40 million bushels too high. Let's wrap things up this week looking at trends in November soybean futures. We've looked at this slide regularly, of course, throughout the calendar year. November 22 beans have declined. They've dropped from over $15 a bushel down to near $13.60 a bushel. I would remind you, though, that that's still $3.50 above the 5-year average for this time of year. So we continue to encourage you to work closely with your trusted risk management advisor to defend your balance sheet. Now, if you'd like more information, please feel free to contact us at 800-664-2321. We'll put you in contact with one of our risk management consultants who'll be happy to visit with you at your convenience. And remember, we upload every Wednesday. Make sure to subscribe to our channel and never miss an upload. Thanks a lot. Have a good week.